Hello friends, welcome to the Blockthrasher Daily Morning Update. I'm coming to you a little late today because I did something I haven't done in a long time. Instead of getting up at 4:30 or 5 o'clock like I normally do to look through all the news to bring you today's highlights, I slept until like 11:30 and it felt good. Yeah, I think I probably needed that. It is February 10th, 2021, and we've got some exciting news for you today. I'm going to start out with a market overview like always, and then talk about the CME Ethereum Futures and give you an update on how that went and what that's looking like. Also, JP Morgan, flinging mud. No surprise. That's something we've seen before, of course. And this Twitter CFO talks about something that could be big news for the cryptocurrency space. Very interesting. Jim Cramer, shilling Bitcoin. That's always a good thing. He has a large audience and just another sign of mass adoption. And then we're going to take a look at the coin spotlight for the day is going to be Cardano, ADA, which is just doing incredibly well. And I want to talk about how I think Cardano is going to see significant gains. We're talking 6x type of gains and what that means for the price. So let's jump on into the market and take a look at where things sit today. The market cap is at $1.34 trillion, which is almost no change, actually down negative 1.30% in the last 24 hours. That probably mostly has to do with Bitcoin kind of dropping a little bit overnight. Volume is at 282.29 billion. Now, in terms of the 24-hour volume growth, Matic Network is up 354.88%. Now, if you don't know, Matic is actually a project that looks to be very interesting. They call it 2L, second layer Ethereum protocol. So what they are doing at Matic is they are allowing for DeFi applications to run off the Ethereum chain on the Matic network, which acts like a side chain, and then send certain transactions over to the Ethereum chain for finalization. So it's sort of like Polkadot's system in a way, where Polkadot has the relay chain, and then the other side chains, you connect Polkadot and send certain blocks to it, but not every block. Obviously, Cardano being a little bit different in that Cardano will have native tokens on chain. So we can look into that a little bit later on, but Matic is doing very well in terms of volume, and Huobi comes in second in terms of volume, 274% increase, and then Aave's got a lot of traction going. Now, in terms of 24-hour price gainers, Avalanche is up 68.84%. Avalanche is another smart contract platform similar to a Ethereum, Cardano, Polkadot, Phantom, all of these that are in the running as we see the platform wars heating up. Qtum is up 37.26% and Lisk at 28.74%. Now, jumping to the prices of the top 10, Bitcoin is down 3.4% at $44,929 currently. Ethereum down 1.83% at $1,721.90. Cardano is up 20% in the last 24 hours. Cardano continues to pump. It is at a 3-year all-time high of 83 cents. I think we're going to see $1 soon, unless the whole market turns in a different direction. XRP is up 6% at 49 cents. Polkadot is just holding steady at $22.83, essentially no change in the last 24 hours. Binance is another coin that's been killing it. It has risen in market cap to number 7. It is up 20% at $125.56. That's impressive. Binance has been doing very, very well, and as it should be, I believe. Litecoin is up 5.73% at $177.81. Chainlink up 3% at 26.5. So, yesterday I was mentioning that what often happens, I've seen this pattern over and over again for the last 3 or 4 years, is that Bitcoin will rise 20%. The altcoins will kind of hover a bit for that day, or maybe even go down sometimes slightly. The following day, we'll see a bunch of money move from Bitcoin into the altcoins, and we see that today. Bitcoin's red at negative 3%. Ethereum's down a little bit too, and the rest of the altcoins are doing, in the top 10, are doing much better. All with the exception of Dogecoin, which is down at number 12 now at it's just fighting to try to stay at 7%, but it is down 10% in the last 24 hours. Uniswap, being a favorite, is at number 15, up 4.66%. Looking good there. All right, moving on to the news stories of the day. Ethereum, if you don't know, it was 2 nights ago, I believe, at midnight, that the CME launched its Ethereum Futures contract. And this had happened to Bitcoin back in 2017 during the bull run market of 2017. And we saw Bitcoin hit an all-time high near $20,000, and then it just dropped. And whether or not there was a connection there to the futures market or not is speculation, but people have talked about that. Now, the Ethereum Futures contracts launch reveals that investors' interest in DeFi and stablecoins is on the rise. Here's some details on how that launch went. The world's leading derivatives market, CME Global Group, launched Ethereum Futures contracts on February 8, right on schedule as announced. Each Ethereum Futures contract represents 50 Ethereum, and CME registered 388 Ethereum contracts. So that's a total of 19,400 Ethereum by the end of the first day of trading. However, it's important to keep in mind, and I talked about this yesterday, I think, or the day before, that these futures contracts aren't actual Ethereum. The Chicago Mercantile Exchange doesn't go out and purchase those Ethereum, so it has no effect per se. I mean, not no effect, but a direct effect necessarily on the actual price, the spot price of Ethereum, but it can affect sentiment because it tells what investors, these institutional investors that are playing in this world, think about what's going to happen with Ethereum in the coming days. So these are all settled in cash. They're not settled in Ethereum. Digital savings and lending platform BlockFi bought 20 contracts. So if you're not familiar with BlockFi, BlockFi is a very useful tool actually, because it allows you to put in Bitcoin and Ethereum and stablecoins as well and earn interest back, right? So currently I think on Bitcoin you're earning 5%, 4, 5, 6%, and on stablecoins 8%. They also are a lending platform, so if you want to use your cryptocurrency as collateral and then take out a US dollar loan, you can do that. In fact, I had a friend just recently do that, and he did very well because he used one of his cryptos and it went up 40% after taking the US dollar loan. So you're able to continue to hold your crypto and also take out a loan, and then you repay that loan. And as long as you repay that loan according to the terms, you get to keep that crypto. Now, if the crypto price drops below the amount of the loan, then the collateral, they will collateralize that. They will take from your crypto holding to make sure that you continue to keep a balance there with that loan. So BlockFi bought 20 contracts. Now, the head of equity, Tim McCourt at CME, said this. He said, the addition of Ether along with our liquid Bitcoin futures and options will create new opportunities for a broad array of clients, whether they are looking to hedge against Ether positions in the spot market or gain exposure to this cryptocurrency or regulated derivatives market. So this is what the hedge funds do. They maybe will buy 50, let's say, Ethereum on the spot market, so that if the price goes up, they earn that profit. But then they'll buy 50 contracts on the futures contracts on the CME, right? So that if the price goes down, they can hedge against it. They'll buy a contract that if the price goes down, they can then purchase those 50 contracts when the price is much, much lower. And so this is just what they do to hedge against price movement. So ETH records all-time high on day 2 of futures trading. On the second day of trading, the price of Ethereum soared 10% to a record new all-time high of $1,826, according to information from CoinMarketCap. Ethereum slightly retracted from its all-time high level, but has gained 2.79 on the day of trade at $1,755 at the time of writing. So the CME data shows that 137 futures contracts are currently trading, with a total of 228 contracts of open interest, compared to Bitcoin's 54 contracts. So clearly Bitcoin is still, has much more interest in the futures market. But we're talking about how the Ethereum launch was sort of a bit quieter, but it's good. It shows that there is interest in that. We might see movement in the direction of more cryptocurrencies being added into the futures market on the CME. Ethereum Futures investors are interested in Ethereum's DeFi and stablecoin ecosystem. So there are things that are happening on Ethereum that aren't happening on Bitcoin that might cause some of these institutional investors to want to have exposure to the DeFi, that might want to have exposure to stablecoins, etc. So overall, as I mentioned before the other day, this is good in terms of institutional investing. This is good in terms of mass adoption. It's also good in terms of regulatory concerns. Back in the day, I remember 2016, there was definitely a lot more fear and uncertainty and doubt, which we obviously call FUD within the space, about regulation the possibility that regulation might be so negative or that it might, shut down cryptocurrency. But as we see these kinds of things, as we see the institutional investors coming in, and we see the Chicago Mercantile Exchange listing futures and whatnot, it really just sort of alleviates all of the regulatory concerns. And I think we are at a place now where that is not a concern anymore. In fact, there was a manager of a large fund. I'm trying to remember the name, because I saw this yesterday and didn't note it down. I posted it in the Facebook group, but he said something to the effect of the regulatory concerns are gone. The idea that Bitcoin is going to be eradicated or disappear is about as unlikely as Christianity disappearing from the face of the earth. So pretty strong and bold statement about the fact that Bitcoin is here to stay, and the rest of cryptocurrency along with it. JP Morgan Chase slinging some FUD out there and some mud. Now, this is where I'm moving into now, is there's this conversation going on within the space and within the institutional world of, will more corporations follow Tesla and add Bitcoin to their balance sheet? JP Morgan Chase jumping in, or somebody from JP Morgan Chase, a strategist at JP Morgan Chase, saying Bitcoin's volatility will stop corporations from following Tesla's example. JP Morgan strategists don't see more corporations buying Bitcoin after Tesla's $1.5 billion purchase because of its substantial volatility. Tesla's massive $1.5 billion BTC purchase could be too risky for other large corporations to follow, argued JP Morgan Chase and company strategists. Now, what's interesting about this is we've seen this. There's this cycle, this pattern that happens here. We've seen JP Morgan Chase, somebody at JP Morgan Chase saying something like this, and then we find out later on that JP Morgan is actually purchasing Bitcoin, right? So they don't always do that which matches what they say. And, it's interesting because it's actually happening, right? So a voice that would be saying the opposite would be the CEO of Grayscale, Michael Soneshian, I believe, however we pronounce his name. He says that institutional demand for Bitcoin has only increased moving into 2021, following a record-breaking year that saw Grayscale's assets under management soar to new heights. Sonnenschein told CNBC's Squawk Box on February 10th, so earlier today, that the record inflows witnessed last year have continued, and interpreted this as a sign that Bitcoin's current upsurge could continue. Contrary to narratives emanating from government entities, Sonnenschein says regulation is not a concern for would-be investors, many of whom he claimed are satisfied that enough regulatory clarity has been provided. Sonnenschein said conversation point number one starts around regulatory concerns, and actually a lot of those conversations are characterized by a lack of regulatory concerns. A lot of the folks making decisions around this realize how much regulatory clarity has been provided around this. In the same week that Tesla invested $1.5 billion in Bitcoin, Sonnenschein says, most institutional investors are happy to edge into Bitcoin over time rather than throwing all their eggs into one basket. And that makes a lot of sense. I think we're going to continue to see that. Obviously, that's smart for them as well. If all the institutional investors just pile in, it drives the price up and it's not as profitable for them. And they're probably going to do kind of a dollar cost average type of thing where they slowly come in more and more and more over time. Here is another voice saying the same thing. Actually, this is a report of Michael Sonnenschein, again, saying the same thing. So this coming from U.Today. Chief financial officers and treasuries of major corporations are following in the footsteps of Tesla and MicroStrategy, seeking exposure to Bitcoin, according to Grayscale CEO. So he's just stepping out and saying, look, we've got this platform that we've built, the Grayscale funds, and we do see these institutional investors coming on board, and we're having conversations with a lot of them, and they are talking very positively. Moving on to probably the biggest news story of the day, and that is, will Twitter be the next, and this is connected to what we just talked about, will Twitter be the next major corporation to bring Bitcoin onto its balance sheet? The Twitter CFO says that they are considering whether to add Bitcoin to its balance sheet. Twitter CFO Ned Segal has said that the social media giant is considering whether to add Bitcoin to its balance sheet. In an interview with CNBC on Wednesday, Segal said, if Twitter employees and vendors ask to be paid in Bitcoin, then the company may consider investing in Bitcoin as part of the treasury. So Twitter employees, if you're listening, ask to be paid in Bitcoin. We've done a lot of things. We've done a lot of the upfront thinking to consider how we might pay employees should they ask to be paid in Bitcoin, how we might pay a vendor if they ask to be paid in Bitcoin, and whether we need to have Bitcoin on our balance sheet, said Segal. Twitter's sister company, Square, is already a Bitcoin investor. Last October, the payments company announced that it had purchased $50 million worth of Bitcoin. So yes, I think JP Morgan slinging mud, slinging FUD, talking down Bitcoin, but there's a bit of evidence that shows the opposite is actually what is happening. And just another sign of mass adoption, CNBC Jim Cramer continues to shill Bitcoin, says Bitcoin is exciting and a nice hedge against fiat currency. That is the news update for the day. Now I want to talk to you about our coin of the day. The coin spotlight is Cardano, ADA. Now, there is a news item about Cardano, and that is simply that Binance has added Cardano as well as Cosmos into its staking program on the Binance platform. So, if you're not aware, Cardano is a proof of stake coin, and the best way, in my view, to stake it is in the Daedalus or Yoroi wallet. It's best to self-custody, to hold that crypto, because that's the only way you know that you actually have that crypto. It's similar to the difference between holding paper silver versus physical silver, where you have custody. Now, institutionals and accredited investors might not want to do that because of regulatory concerns. Individuals might struggle with that because of concern of loss, but if you take proper steps, and I have an article on my website that talks about how to properly self-custody, how to store your crypto and keep it safe. Self-custody is the best way to do that, and staking of Cardano is seamless. It's incredibly easy within the Daedalus wallet. What's also nice about Cardano staking is that you don't have to lock up the coins. They are totally liquid, and that stake that you earn automatically goes right back into your wallet balance and can be staked, so it's constantly compounding and earning interest. Cardano is currently sitting, if we look at the coin market cap, at number 4. Cardano is now the number 4 cryptocurrency. Actually, I'm sorry. Number 4 is where it sits because of Tether, which is just a stable coin and not really a cryptocurrency. So if we remove Tether, Cardano is actually number 3. Bitcoin, Ethereum, Cardano. And here is the thing about Cardano. I believe that Cardano has the potential to see gains of 6 times increase. And I'll get into the reasons in just a moment, but Cardano is just getting started, and it's already the number 3 cryptocurrency. So that means that Cardano has a long ways to go. All right. I haven't written this down, so I'm just going to go off the top of my head, but I have been studying Cardano and researching Cardano since its launch. And what makes Cardano different? We'll start with this. Methodology. Methodology is number 1. A lot of cryptocurrency projects, they have pretty solid teams, but they're in this race to bring their product to market, to launch. And in doing so, it's a move fast and break things type of mentality. But the problem is that once you launch a chain it's very difficult to make the changes. And depending upon how your governance system works and whether or not you have a governance system at all, it can be difficult to do that. And that has to sometimes be done with a hard fork, etc. So what Cardano has done is had a different approach. Charles Hoskinson, the founder and CEO, has a philosophy that is a methodology that says, no, let's move slow. Let's write code, write papers, let's do research about how to do these things properly. So whatever the issue might be, if it's creating a totally new and revolutionary proof of staking system, which they did, and it's called Ouroboros, we want to write papers, do the research, send those papers out for peer review to leading scholars in universities around the world at places like MIT or the other places like that. And we want to then thoroughly test to make sure that this system is verifiably what we're saying it is, that it can do what we say that it can do. And so it's taken a long time, and a lot of people have thrown a lot of FUD at Cardano because of that over the years following, saying, look, it's a project without a product and all of this type of thing. However, it's been a slow, instead of the train taking off and going 1,000 miles an hour and being impossible to turn around, it's been like, we're going to move slow, we're going to get the train going, and it's going to build up steam, and we're going to move in the right direction and make sure that everything on the train is functioning properly, so that once we are going 1,000 miles per hour, we don't have to try to turn the thing around or stop completely or whatever. So the approach and the methodology is in my view, far exceeds all of the other cryptocurrency projects out there. Now, when it comes to the team, Cardano was founded by Charles Hoskinson, who is a former co-founder of Ethereum. And if you look into that, there's a big story as well with Ethereum. One of the issues that happened because of the difference in that methodological approach that I was just talking about was that there was the DAO hack, and then that led to a controversy. And that some people said, let's keep the original Ethereum chain going. Some people said, no, we need to roll it back. And so they ended up rolling it back. So the Ethereum that is the Ethereum today is not actually the original chain. The Ethereum Classic is the original chain. And Charles Hoskinson's company picked up development on that chain and helped to keep it going, and that is ETC, Ethereum Classic, right? So that's just another example of the type of things that Cardano is ensuring won't happen. So the team behind Cardano is in my view probably the best there is. It's a large team. I believe IOHK has over 150 employees. If you go and you check out the team, these are people that are in the top of their field, researchers and scientists and coders, and some of them are even when it comes to Haskell, I believe the guy that I can't think of his name right now, but that wrote the language has been involved in helping with the development of it. So the team is just stellar. It's top tier. Totally have confidence in the team. When we move on to the technology is phenomenal. Cardano Will, once it ramps up and gets going completely and is fully decentralized, and as it expands and it grows, the transactions per second capability actually increases. So Bitcoin is like 5 transactions per second. I think Ethereum has a max of 16, somewhere in there. I should have written that down to be absolute, but my numbers are going to be pretty close. I mean, I know that 200 or 300 is about the max you get on those type of proof of work systems. So with Cardano, the more people come into the network, the faster it gets, and so it can potentially literally handle 1 million transactions per second in the future, whereas right now Visa does like 20 or 30,000, somewhere in that range. So speed will not be an issue. The way Cardano works is that they have a transaction. They have the main chain, which is called the settlement layer, and then they have a side chain, which is called the computational layer. And so this is a really fantastic system as well, because it's separated the smart contract code from the main blockchain, right? And so Cardano is going to have what are called side chains for other projects to run alongside. And this is sort of like, you can think of it as like hyper threading, right? So you can have all these processes running at the same time and then all settling everything on the settlement layer. And that's where the speed comes from as well. So fantastic technology. Now, another difference is that within Cardano, the tokens that will be coming out, they are going to be native. So in Ethereum, it takes a smart contract to create a token, and then that smart contract has to interact with the chain, the Ethereum chain, and there's fees involved with that. And we all know that the gas fees have been really prohibitive of late. If you try to use Uniswap or 1inch or one of these other exchanges, or do any kind of smart contract interaction with Ethereum, you could be looking at a fee upwards of $20. So that really just removes the potential for a lot of things that could be done with DeFi and decentralized apps, and makes it not viable. So Cardano is fixing all of that, basically. The swapping between coins on the Cardano blockchain will be, the native coins will be swappable without fees or with very, very, very low fees. So the fee structure is going to be phenomenal as well. So you've got a great team. You've got phenomenal technology. It includes things like using the Haskell language, which is more rigorous and more. It's what is used in environments and applications where you need to know that your code is going to work as you expect it to. So in banking, in finance, and in even military type applications. And so you've got the Plutus playground, you've got the Marlowe playground, where developers can go in and they can test out their smart contracts, and they can write their smart contracts. And so with the technology, at the end of the day, I think the question comes down to, if I'm a developer and I'm looking at launching a new project, I have this idea for the next groundbreaking social media type of application, and I want to do it on blockchain, and I want to use all the capabilities of blockchain. Do I use Ethereum? Do I use Polkadot? Do I use Cardano? Do I use one of the lesser known ones, Algorand or Phantom? And I think at the end of the day, what we're going to see is that I, as a developer, would choose Cardano. And other developers are saying this. Ben Gortzel of Singularity.net, which is also another amazing project, which is AGI is the token, is building a marketplace for artificial intelligence. And he's super excited about Cardano because they currently are an Ethereum token, an ERC20 token, but they've run up against walls, technological barriers that keep them from doing what they want to do. And so he's excited about what he's going to be able to do and what they're going to be able to do as a project on the Cardano blockchain. There's an ERC20 converter, which is going to allow the tokens that are currently on Ethereum to quickly and easily convert over to Cardano, which I think is going to help with that process and with adoption. And so it's likely that we will see a number of projects switch over to Cardano. So the technology is great. So I covered the team, I covered the technology. They have a governance system, which one of the biggest problems within cryptocurrency space is, how do we go about making a change if a change needs to be made? And so the Catalyst system is what Cardano has developed, and people can actually get paid in Cardano for getting involved in that. And so between the stake pool operators and between the community and the voting system and everything that's happening, it's all in the process of being thoroughly tested and rolled out. And I just think it's going to blow everything away. It absolutely is. So here's the thing about it. Why do I say Cardano could 6x? Well, it's as simple as this. If we look at the coin market cap, total Ethereum market cap, it is currently at $201 billion. Okay, so let's just say that in the next year or two, and it could even be sooner, but let's just say in the next year or two or three, Cardano reaches the same market cap that Ethereum currently has. Now, obviously, the entire market could, the total market cap could 10x from here, and we could see, instead of $1 trillion in the cryptocurrency space, we could see $10 trillion, and that would sort of blow all of this away. But in terms of just some simple math to illustrate what could happen, if Cardano reached a market cap that is equal to Ethereum's market cap today, the Cardano supply is $31 billion, basically. You can see the numbers there on the screen if you're watching the video rather than listening to the podcast. If you take the total market cap supply of $201 billion and you divide it by the Cardano supply, what you end up with is $6.48 per coin. So currently, Cardano is sitting at 80 cents. So, that's not even a dollar. So that's actually more than a 6 times increase. But that is clearly within the realm of possibility. A Cardano with a price of $6.48 if Cardano just catches Ethereum. Well, friends, thank you so much for your time. As always, please be sure to go to the website, blockthrasher.com, get a free membership. If you get a paid membership, you will be included in a lot of things that are coming up that I'm working on, which is a weekly newsletter. I'm going to have private group chats where if you have questions and you want to just discuss all things crypto, you'll be able to come into a video chat or into a private chat room and do that. Also, check out the Facebook group. There's a lot of really good activity going on in our Facebook group, and unlike a lot of others where it's just it's sort of a lot of nonsense, I work hard to make sure that everyone in that group is contributing with good and positive information, and it's a positive place. Please check me out on twitter.com/blockthrasher. Look for us, look for the podcast. Please, I ask you to subscribe and set your notifications so that you receive these daily morning updates and the other videos that are being released. And remember, friends, it is always, always a great day to earn more crypto. Thank you, and talk to you soon.